Hi guys. So I wanted to do a reaction to Trevor Neil's interview, and there's so many good gems we can get out of this interviews, and especially this one because he is an educator to the institutional traders, so the big hedge funds and the big banks and institutions. He is their educator, and he basically explains why the successful retail traders are actually better than the institutions, and the institutions aren't better than you actually think, because there's a common misconception that essentially there's something that retail traders don't know that institutions do know, and that unless you know what the institutions are doing and unless you trade like them, then you're not going to have the same track record or results. And actually, he just says, listen, if you follow the institutions, you're not going to get the same results. And he explains why you won't get the same results, because there's so many different factors that affect how you should trade, and how you can never copy what the institutions do. And in fact, if you try to for example, if you try to use quants or bots like the institutions, they use a lot of bots, whereas retailers use technical analysis. And he actually supports that retail traders are actually better at technical analysis than institutions. But he explains to you that actually the retailers are better than the institutions if you consider the successful 10% of retail traders. And so this is really, really important because no one actually talks about it. Everyone always says there's something that the institutions know, and if you don't know, then you're missing out and you're never going to do as well as them. So this is really important.
I think not. Just don't try and compete with the big money machines, the funds, the hedge funds, the professional traders, the institutional traders. So what do I mean by that? For example, these people have got microsecond, low latency connectivity. They definitely know the news before you do, even though the news is released at some instant at 1:30. They actually know it before you do. They're already priced it in. They've already made their money and go. You can't compete with that. So just avoid trying to compete with the area.
I love the first point he mentioned, and the first point he mentioned was essentially that if you try to trade news like the institutions or the big banks, they receive news. Say if the news is going to be released at 1:30, before 1:30 they already know the news, and by the time it becomes available to everybody else and the retail traders, that news is long overdue. It's useless now. They've already gotten in and gotten out. So essentially, fundamental trading is actually worse to retail traders, even though a lot of people somehow strive to be fundamental traders, which I've always said it's a terrible idea if you're at retail level, because there's no way for you to know the news ahead of time. Even if the news is released at a certain time and you've set alerts, that is already late news. By the time it's released to us, it's already late. And this takes me back to a documentary done on quantitative quant traders. And essentially, they receive news so fast, they invest so much time in the fastest internet, and they try to be as close as they can to the news source, and they receive it in microseconds. By the time you receive it, it's useless, and all the manipulation. And when you're trying to actually get in, that's when you dive into manipulated systems, and then you'll see that price will spike in one direction when the news is released, and then go in the complete opposite direction, which is why Neil is saying by the time we receive it as retailers, even though the news is released at 1:30, it's already dead news to us. It's already useless. And so he was like, why don't you go for the places you have an advantage and not try to compete with the big money, because you have advantage in that the big money can't move without moving the market with them. So when they move, imagine like a big whale moving. They move the market when they move, which is why you have an advantage in that once the market starts moving, you can get in without affecting the rest of the move.
I think that the areas where you have no disadvantage is if you're trading exchange traded products, so the price is transparent in the security. If you trade with a daily chart, you're seeing exactly the same high and low and close and volume as any institution, so it's nothing secret about it, and so you can see what he can see. And so if you operate in that longer time frame, for example, all his advantages have gone. Actually, you've got many advantages now that he hasn't got. You can learn to trade as probably possibly better than an institutional guy who hasn't got any time to learn. You can study, you can do that. You can also not trade. It's not an option for many of these people. They must trade, and you can see that it's not the right time and I shouldn't be doing it. Also, being smaller than them has a lot of advantages too, because for them, being very large means that by the time they start buying things, they're starting to move the thing itself. You're most likely, if you do buy things, you won't be moving the market at all. And so you can buy strengths and breakouts and things like that. But an institution has to predict the breakout, which is a very risky thing to do, in order to start buying before the event itself.
The advantage he talks about, which we have as retail traders, is the fact that number one, we can choose when we want to trade or not, whereas institutions have to trade. And he also says that manipulation is basically on the lower time frames, and that's where the news really affects the charts, which is on the lower time frames. So as long as you are on the daily, the 4 hour, the weekly, you see exactly what the institutions are seeing. So it's essentially the exact same chart. It's when you go down to the lower time frames, the hourly, the 15 minutes, where all the news and manipulations taking place, and where you don't have an advantage, is where he's saying you should stay away, even though institutions dive for that area because they want to make small movements. You should not do what they should do. You should go in the opposite direction and focus on the larger time frames, which is why he's saying you shouldn't be like institutions. So first of all, he talked about fundamental analysis, which is how institutions trade, and he says don't do that. And then he says go to the higher time frames, which is the opposite of what institutions do. They go to the lower time frames, the microseconds, the 15-minute charts, and he says don't do that as well because you don't have an advantage.
I think not. First of all, what people think is manipulation of the markets, things like short squeezes and dark pools and things like that, they're not. They're just factors of the market. It is things that happen, that markets go into backwardations and things like that. It's not manipulation, it's a short-term nearby shortage has caused that. And really, does this affect and impact detrimentally to the retail investor? No, it doesn't. Usually, it's the institutional investor that's on the wrong side of these things that makes them appear so bad. The manipulation of the price in the shorter term is again, I think, is not possible really these days. There's too many eyes on it. It's the reputational risk for the institutions is too great. The fines are enormous. They will get caught. And so it just generally doesn't happen. You may get rogue traders, but internally firms really are very conscious of that, and a bad apple can ruin a whole bank.
So here, his view on manipulation actually just completely shatters everything we believed about manipulation, which is essentially when you see huge movements in the market that go a huge divergence in the market that change direction quickly and move rapidly. I thought that was manipulation, but in fact, he's saying that it's not manipulation, which is weird because the divergence strategy and the TDI indicator is based on manipulation, and you can clearly see that what you're seeing on the indicator and what you're seeing on the charts are two completely different things. So I have to disagree with him on the manipulation thing. It's been obvious. Even there's a case recently on the rand manipulation, and it actually has a lot of US dollar, US banks involved in the situation. You can go check it out. It's based on the rand, US dollar rand manipulation that happened recently in South Africa. You can go check it out. So what he's saying, that manipulation is rare or that it doesn't happen, is not true. And then he actually says that it's difficult to manipulate because there are ramifications. And after that case was heard, actually, the only ramification that happens is that you're given a slap on the wrist. It's just a fine, which is less than 10% of their of their revenue a year anyways, so it's just a slap on the wrist. They've made more than 10% anyways, so they really don't care. And so I'd have to disagree with him on this manipulation issue. People know that the pound especially um, experiences a lot of manipulation, the euro US dollar. So I don't agree with him here, and especially when he says it doesn't affect retail traders. We all know that they're brokers which can manipulate the charts of their traders through spreads and things like that. So when he says that you shouldn't be worried about, I disagree. You should be very concerned about the broker you pick, their spreads, how they manipulate, how they adjust to news. Because what a lot of brokers actually do is that whenever there's news events, they open their spreads so wide that the chart you see can be completely different to the chart of someone using a completely different broker. And at other times, when I say that they're manipulating, that's the manipulation we're talking about. When we're talking about spreads, or we're talking about fake outs or fake breakouts, that's the kind of stuff I'm talking about, where price will break in one direction, knock everyone's stop losses, and then go in the complete opposite direction. You should be worried about manipulation, contrary to what he's saying.
This is really something that private traders can do. Um, Now, they can't be high frequency traders and low latency traders. The cost barriers are too great for them, but they can become systematic. Systematic just means rule based. And there are plenty of very good programs out there which start at free, and even very good ones like MT4 is a very popular one in the retail market, and it's a very good program, and there are better ones which you pay more for, and it's a lot to do with the flexibility and the data and processing power of it. But all of these programs are very good. Now what they allow you to do is to develop a method which you have tested and finessed and said, does this work, or it would work better if I did this, and if I changed the way I operated the stop like this, then eventually come to a conclusion that if I continue to operate in this way, I will, in the long run, make money if I do that. And this will give me the discipline to do it, take away all the emotion. That's just the correct thing to do. If you don't make money, it wasn't your fault, it was the fault of the program that it wasn't correct, but it wasn't to do with you. And mostly people stop doing things or get worried and say, oh, it's always me, or I can't do it right, or I've lost money 5 times, so I'm not going to take this next trade and skip the next one, and things like that. It will stop you doing all that kind of thing. So you've got the discipline, the confidence that comes with that, and I'm certain that is the right way to do it, and something that's achievable for a retail person.
So here he mentions the crucial point of not aiming to be a quant trader or an algo trader or high frequency trader. Number one, because of the cost of developing your own bot and implementing it, and also because of news. I don't know if you know, but then like news also does has it has a way of affecting bots and your algos if you try to use robots or people who come up with these programs that they're selling and things, and they usually end up only breaking even, so they actually don't work. A lot of robots, trading robots and algos actually don't work. And so the alternative, he says, is that what you should aim for is like a rule-based system, a method, strategy which you implement. What I mean by that is that you should have a set way of thinking, methodical way of thinking, which is, for example, you do your analysis at a certain time. You have certain things you check before you enter a trade. So you have a checklist that you must follow before you enter a trade, and that's what he means by method and rule-based system. So that you never break your rules. You stick to your 1%, 0.5% risk on a position, and that's what he means by having a rule-based mentality. And this is something Anton Creel also emphasizes, that he says he doesn't see a lot of retail traders implementing, which is having a set checklist that you follow before every position. So he says that like people will be like, if it hits a resistance or stop loss, I'm jumping in. And then he's like, but what's your system? What's your actual method of use? What's your system beyond your strategy? Do you check that certain news is about to come out? Do you look at volatility? Do you look at certain fundamental factors? what is your checklist for every position, which he thinks is more important than having a robot which helps you.
I think using technical analysis and systematic trading is something you can do, one can do, and you can do this as well as or better than any institution. So you're at no disadvantage unless you try and compete in the very short time frames and very difficult and strategic type of trading which they specialise in. You can't do it better than them. And you haven't got the money, power that they've got too. But they're at no advantage over you if you trade systematically in the markets. And you've got many, you can do it better than them. You've got time, you can study, you don't have to do it, you don't have the problems with size that they have, and that creates considerable problems for them. And so you can you can take trades which they are passing over because they're not, it just can't be done for them, but it is a profitable trade for you. And the other thing, the second thing that I would suggest is, if you can, I would try and get somebody to help you. This is not an easy thing to do, particularly for a retail person, to find somebody who's willing to spend time, who's got experience and can coach you. Like any sportsman, you know, they need a coach who's going to push them on and correct them and study them and be brutal but knows how to do it. But he's not the sportsman that you are, but he's there to help you and to watch and to criticize. And try and find somebody like that. Beware of all the charlatans there are, the sort of gurus. Plenty of people who pretend they're that thing, but really it comes with time and experience and background of people, and try and go for those kind of people. I do this kind of work myself in the institutional area, because they have problems too. They have off-form traders that they want to see what's wrong with those traders and people that they're bringing through the system, and I've worked with those people too. But yeah, they are available at a retail level, not easy to find, not cheap. You know, the good ones, inevitably, you're requiring a lot of their time, valuable time, and they are experts. So you don't expect them to do that for free.
Neil, so Neil, Trevor Neil endorses technical analysis and systematic analysis, which we've just talked about, which is having a checklist and following a certain method before you enter a position. And that combined with technical analysis is what he recommends for retail traders. So no fundamentals at all, which I've always said, but people somehow love fundamentals. I've always said there's no point in looking at fundamentals. I mean, you should know the basic fundamentals, as in the really important news events and what to do and what happens with the important news events. But with the regular stuff, there's no point in you being involved, and you're better off just staying away if it's an NFP. If it's an NFP or any other big news event, you might as well just take the day off and rest. And he just says systematic analysis, systematic trading with your technical analysis, you actually have an advantage over the institutions, and you can do it even better than they can. You have time, you have experience, you have all the time to learn. You aren't overcrowded by, well, you don't have targets that they have, which they have to meet. You have all the time to learn, and he recommends technical analysis, especially on the higher time frames, the daily and the 4 hour, to avoid manipulation. And you pretty much said there's no need to stress about fundamentals and having a trading robot and things like that.